Hi, this is Joseph. It is Friday. It's August 13th. So I'm going to walk you through a couple of trades set up here. Really good opportunities. Sometimes we're going to go through, let's say, one particular day where it could be a bit choppy and you might want to stay out of the way. That happened with the euro dollar and the pound dollar over the past couple of days now. So I had fewer trades and I just have to wait. I just have to wait until it clears up. So you'll see here, this is the euro dollar. This chart is set up to mimic approximately a 30-minute to a 1-hour time frame. This point and figure. So this is where I'm going to get my entry, and then this is also where I'm going to get and calculate my take profit levels. So again, as I always say, I want to have a minimum conservative first target, and then I'm going to have a second or possibly even a third target. Sometimes I can get the first target and the second target all within the amount of data that I have that's available when I get into the trade initially. Other times, with the amount of data, I might only be able to calculate, let's say, the first target, and then as the trend progresses in whatever direction of the breakout, it'll form a new range of reaccumulation or redistribution, and then that new range of consolidation, that sideways price action, will give me an opportunity to find another count that's much further. And then, of course, also switching over to a larger time frame as the trend continues, I can set up my point and figure to mimic, let's say, a 4-hour or a daily time frame if it looks like it's just going to keep on going. So this, again, is the euro dollar, and this was a pretty good move so far. It's already hit the first target. It's about to hit the second target. Now, it looks to me that if it hits the first target here, the second target here at 1.1808, that's my second target, that it may continue. And I do have a count with all of this data here that would bring me a lot further, or take me a lot further, if I was to look for a third target. But I want to walk you through how I was able to calculate, again, these targets here. So the first target is going to be on this data right here. So there was approximately 9 columns. And then I went a little bit further to give me something a little more conservative. And I want to explain why I did that. Normally, I wouldn't do that in a situation like this, a count that's that compressed. I would start looking at I'd start going back over here to the left and finding something that resembles a more solidified range of consolidation or reaccumulation on the way up. And again, the reason that I did that, and I was looking for more conservative profit targets today, is that today is Friday and I don't want to get stuck holding a position through the weekend. That is primarily the only reason why I didn't go out any further. So you have the ability, if there's enough data on the chart, on the point and figure, to calculate these different targets. It's just, and then you have to think to yourself, okay, well, and this is another question that we get all the time, which is that, are you going to be able to determine if these are going to be like 1-to-1, 2-to-1, 3-to-1? Everybody's got a different idea of what they'd like to see. But in every situation, when you get into a trade, even on the initial entry, you know where your targets are, or you shouldn't get into the trade. But, we always know where our targets are. So based on the targets, we also know where our stop is, and then we can see the distance and calculate whether or not the risk to reward is in our favor, according to your specific plan. I mean, some people are okay with 1-to-1s because that's pretty much sometimes all you're going to get on certain days. Other times it's going to be 2 and 3-to-1. So let me walk you through. I'm going to show you the pound dollar, and then I'm going to walk you through the initial setup. So the pound dollar looked a little more, as far as the structure, I liked the pound dollar setup. You'll see it in just a moment here. You're going to see how clear it is. I had to adjust this so that you can see that second target up there at 0.8. We're only about 8 or 9 pips away from it. Actually, about 7 pips. I've got 0.1 on another chart, MT4 chart here, so it should start ticking up a little bit higher. So let me reset that. So you can see the structure here. Let me show you the pound dollar. So you'll notice on this chart, this is the pound dollar. And again, this is set up to mimic the 30-minute or 1-hour time frame based on how I constructed this chart. And you can see the structure is a lot better. I like this structure. We have a clear decline, a sell-off. We've got that selling climactic price action here, and then the automatic reaction, and then we get these tests. We get that spring action, more or less. I'll show you the candlestick chart here in just a moment. And then I get confirmation that with the amount of volume and how I'm tracking and counting these waves, I'll show you again on the next chart how I do that. It all sort of confirms and lines up with what I'm looking at here on the point and figure. So this one gave me a much more accurate count. So the entry here was at 38.09. It's already hit the first target here at 41 pips. The other euro dollar trade, even if it doesn't hit 0.8, which we're only about 7 pips away from that final target, we still earned and picked up, we close and lock in profits along the way. So we've already picked up 40 pips on the euro dollar and 41 pips here. So that's a total of 81 pips. With a standard lot, we're looking at $810 for the day. But these are going to go a little bit further. And here's the other issue, is that if these things stall for whatever reason before the market closes, in most cases, if I was trading off of a larger time frame, I would probably allow this to go. I do have a separate account where I do trade on a larger time frame, and I would hold over the weekend because these are trades that I've already determined and I'm prepared for holding for, let's say, a few days, even a few weeks, even a few months. These are more long-term trades. That what you're looking at now, these are day trades. So again, for a day trade, if it starts to stall for whatever reason and it's not going to make it up here to the 38.93 area, let me make sure you can see that. Let me pull this down. Sorry about that. The 38.93 area, that's my second target. If it hits that today, then I would pick up the total from the entry to that final target, 84 pips. But so far, we've already locked in the 41 pips. What I'm getting at, though, is for whatever reason, if it stalls right around the 80, the 33.80 or something like that, or in between, even the 70, and it just starts to go sideways, again, I don't want to hold the position through the weekend. And I'm not going to give back any of these profits. I'm just going to lock out the trade. It is a day trade. This is not a trade that was specifically set up and identified on a 4-hour or daily. So again, that's the reason that these targets are based on the time frame that I'm trading off of. So sometimes I can find the trades on a smaller time frame and then confirm with a bigger time frame overall move, if you get what I mean. So there's a confirmed entry and trade, let's say on a daily time frame, but I can also jump in and out of the trade as long as I have confirmation with things that look like this on a 30-minute or 1-hour chart. But I have to respect the take profit levels relative to each time frame that I'm trading off of. So again, I have to respect these take profit levels because they were generated off of this data here that resembles a 30-minute or 1-hour time frame, as opposed to me looking at targets like this and then staring at a daily time frame where the target's another 300 pips away. There is a target on this one that's actually 200 or well over 200 points away from what we're looking at. But again, that's a day trade. That is a long-term position. That's meaning that a day trade, I meant a daily time frame trade setup, that particular time frame. This one, again, is a 30-minute or 1-hour time frame setup. It's a day trade. I have to respect that, and I have to acknowledge that I've got to be, in some cases, quick to make sure I'm locking in my profits. I have to respect these take profit levels according to the time frame I'm trading. Just keep that in mind. So let's go to the bar chart or candlestick chart. Sorry, I use bar charts, candlestick charts, either way. So I'm counting the waves as we go down. This is a 15-minute time frame. Now this shows up on a 30-minute, but it looked a lot better as I was going through the different time frames this morning. It looked a lot better as all of this was sort of unfolding this morning on a 15-minute time frame. I could clearly see it. 15-minute was going to be okay, and it was going to give me the opportunity. Again, sometimes there are certain days when the 15-minute isn't going to look very clean. You might have to go to a 30-minute. You might have to go a 1-hour chart, something to that effect. But just be prepared for that. Every day is going to be a little bit different. You have to get in there. You have to dig. You have to look for the information. You have to source all of this out. But nevertheless, this gave me a really good count on these swings, and I was able to, again, find the selling climax, the automatic reaction, analyze the phases of this consolidation so that I know when I'm getting in. I want to get in phase C and phase D. So here is my spring. Here's my test. Here's the spring. Here is the test. So on this, the reason that I count, let me go ahead and open this up. The reason that I count the swings is to measure the amount of volume that's in these moves. So you can see there's 3 15-minute candles right here that totaled 1722. 1722, 1,722 contracts traded within that range right there. And the first thing I pay attention to, yeah, it looks strong at one point, right? You can see volume coming back into it. But the candle, even on a 15-minute time frame, it did not close below that support level. That's the first point where I'm going to start paying attention because it starts to look like a spring. In this case. So then I get the move away. So here it prints the 1722. Keep that in mind. The move back up, these two candles here, 2 15-minute candles for 1577. Well, that was probably one of the strongest volume bars here in quite some time. You can see we go back for about an hour or so. And things are starting to warm up here. This is right around the London Open where I'm moving my cursor. you can see that things are starting to, really hold here and print some kind of a solidified support. But it doesn't mean that I get in on these moves here, because the point and figure isn't going to give me an entry just based on this kind of activity. It's still going to take some time for all of this to build back up again, and then the point and figure gives me that break. Gives me the entry as it starts to break up and we see more volume, more participation move back in. So let's continue this out. So we've got 1722 on the way down, 1577 on the way back up. Things go sideways for a little while, and then that one last price swing to the downside looks pretty strong. Notice the range of this one particular candle. It's a lot larger than some of the other candles that we've seen all morning. And then it stops. The candle really doesn't go, or none of these candles really close below that support level. This one does just by a pip or so, but then I've also got to take into consideration the actual low that printed on that first downswing that created the spring. So again, it's holding. It's not going anywhere. It's not taking out that low. But notice the amount of volume. There's actually more volume in these two candles here than there was with these three candles, 1722, and here with these two candles I had 1747. 1747 versus 1722 with three candles. So in a short period of time, two candles as opposed to three candles, there was more volume, more activity as it started to force its way right into that support level, but couldn't go any further. Again, another signal that this is a test and it's starting to solidify that support low. Some people jump in pretty quick and they jump in on the first bullish engulfing candle, or maybe they wait for some kind of a evening star or morning star, depending on which direction they're trading in, and then they get in on that. I used to do that all the time. Not enough. That's not enough. That's only going to work sometimes, and then sometimes it's not going to work. I don't want trades like that. I want trades that are always going to work. I know that I'm going to experience a loss, but by following this procedure and this kind of mindset where I want every one of my trades to be a winning trade, meaning that I'm willing to wait and wait and wait and wait for more confirmation until I know I'm in the right trade, I'm going to have far fewer trades, and it's going to be a hell of a lot easier for me to replace any loss. I can replace that loss on the very next trade. And if it takes off, and again, my losses are going to be very small. They're not going to be 50, 60, 80 pips if I'm day trading here. So, but my winning trades for day trades can very often pay 80, 90, 100, 200 pips. Even on a day trade, it happens. It just doesn't happen every day. Plenty of videos like that where you see me day trading and we're picking up like 150, 190, 200 on the pound dollar for day trades. They're in the membership section on the live coaching call replays. So again, this is the thought process that goes behind identifying all of this, and I'm still not getting into the trade here as all of this is unfolding and giving me the forms of confirmation that I need. So that's why I'm counting the waves, and I can see the divergence here. I can see it start to all set up. Now it's a matter of waiting, and then I go back over here to my point and figure. You can see all of that activity right here, and then here is where it starts to accelerate, and it gives me my entry right here at 3809. Now there was a previous entry down here. I watched this right here at 1.3801, but there was a clearly solidified level of resistance right here, and I was much more comfortable. I'm a very conservative trader. Doing this 20 years, I want to be right every single time I take a trade. I am not interested in getting into a trade and then babysitting it and watching it go sideways just because there was a candlestick pattern, and I'm not confirming volume or if it's even likely to break out at that point. This point and figure chart is going to help me determine when it's likely to break out, when the breakout's occurring, and when I can get in and ride the momentum. We all want that experience. If you've been lucky, if you're just starting to trade, you're looking at your charts and you're thinking to yourself, well, there's been times perhaps that you've been in a trade and then all of a sudden that it just takes off and it's great and you're positive, you're in profitability in the trade and you're riding, you're thinking, wow, I hope all my trades are like this. I remember thinking like that, but it doesn't work like that. When you use point and figure correctly, almost all of your trades are going to be just like that. You're going to be able to ride, get in at the right time when the market's starting to break out or move in an accelerated manner, and you're going to be able to ride that momentum and you're going to be in profitability for most of your trade. And it's so much easier and so much less stress because you're not second guessing anything. You've already done all the work. So again, conservative, I could have taken this down here and probably been right. I saw the divergence with this right here. These tests right here to the downside. This was the test. This was the spring. This was the test. We like to see these tests. That's phase C, and then I'm going to start looking for the opportunity. Sometimes point and figure can give me an entry back down here, but it did not today. It did sort of in this way. right here, let me go back over to this chart. Let me see why it's not pulling back up again. So again, when I said it did sort of, it was this little entry right here at 0.1. So this was a perfect trade. I'm going to continue to hold this for a little while. I've already locked in my first profits at the first target. And I'm going to continue to hold this. Again, the same thing with the euro dollar. If it starts to roll up, but it doesn't hit that 93 up there, and again, if it stalls at 80 or 70, I'm probably going to just close out the trade at that point. I don't want to hold a day trade through the weekend. I'll hold a larger time frame trade that I have already clearly confirmed. If I did all the work and this was, let's say, a daily time frame setup, well, then I know I'm going to be holding it until it hits that target. And confirming, things along the way, looking for areas of reaccumulation along the way as it's moving its way back up. So hopefully that explains quite a bit of how I'm looking for these short-term day trades. And again, not every day. It's not possible that every day things are always going to come together this perfectly. You just have to wait for them. You have to be prepared for the fact that some days it's going to be just really, really choppy. We saw that. I was watching the euro dollar the other day, and it was just like too choppy. And I just sat there and looked at it for a few minutes. I thought, I'm not even going to mess around with it. Like, why would I play with that? Well, back when I first started trading, it was that fear of missing out, because I would hear that other people, let's say if I was in a chat room, I would hear that other people were firing off trades. Well, a lot of those guys wanted to be contacted individually so that they could sell something to people. They were just saying, yeah, I just made money on this, but they didn't always report when they got into a trade. It was a joke. You have to be paying attention to what their motive would be in a situation like that. And then the other issue is, I would just get into these trades because I was just down a lot of money. I just wanted money. It wasn't just necessarily that I was comparing myself to other people and how active they were trading. They could be lying, and most of them are. But the fact is, I had lost so much money. I felt I had to do something, and I had to do something to earn back some of that money that I had lost. But it doesn't work like that. You're only going to earn back the money that you've lost or a losing position, previous trade, by just simply waiting for the next trade setup that you understand, and then following the rules, just letting it work. This system works. Now it's a matter of making sure that you follow the system and you initiate all of these concepts and you stay with an extremely high level of discipline and accountability. You have to have total ownership of your behavior and your thinking. I don't want to jump in with these risky trades down here at the bottom where I don't have confirmation. That's why I look to my point and figure every single time. Many times I'm going to see a bullish engulfing candle down here at the lows, and it's going to move up a little bit, and then the whole thing rolls over and takes out the low and just keeps going lower and lower and lower, and I get stopped out. If I was to behave that way, I don't do that. I did do that in the beginning of my trading career based off candlestick patterns and certain indicators. But we're only using one indicator in this instance, just the volume indicator on the previous chart. Counting the waves, analyzing the phases of consolidation, looking for the divergence, waiting for the reversals. Again, analyzing the phases of consolidation. That's important. I had phase A, phase B, phase C. I could see where the spring was. I could see where the retest was. And then I could see where it was starting to move back up. Counting the waves showed me the divergence and how much activity, how much effort is going into some of these price swings. That's what I'm looking for. That helps me sit up and pay attention to the possibility of these reversals. And then I wait for the point and figure. And the point and figure is always going to give me, or only going to give me, an entry when there's a change in volatility. In other words, it's time to step in, not here inside of all this consolidated choppy price action. Again, I've said this so many times, but it's important to remember that I used to, the first year of my trading career, when I was studying candlestick patterns, I used to get inside of ranges of consolidation like this. I didn't understand these concepts of analyzing the phases of consolidation and using volume to measure, these price swings. So I would get in with candlestick patterns if there was a bullish engulfing candle here, and it wouldn't go anywhere. It would just kind of go sideways, and I would, it'd be another 6, 7, 8 hours. I'm still in the trade. It's not going anywhere. Then it dips down one more time during the, let's say, London session open, and I'm thinking, I'm panicked, and I'm thinking this isn't going to work. So I close out with a loss, and then it doesn't go anywhere, and then it reverses and goes right back up. And then I'm thinking, how is this happening? What do I need to do to fix this? We all go through that. We all go through those questions and those thoughts, and it's a matter of learning the basics and the true fundamentals of how and why price moves the way it does. And it's really easy to get caught up in looking at candlestick patterns and some indicators and then following people on YouTube, right? Some of them might be able to share some of their strategies, but they're not going to give you all the details. And then a lot of people just don't have enough experience to be able to, they haven't spent enough time in the business to know all of these different concepts. They're just looking for simple things like moving average crossovers and stuff like that. It's just, sometimes they work, sometimes they don't. I don't want a system that sometimes works and sometimes does not. That's not how I was able to grow my trading account. I take care of my family from my trading, and you probably do too. So you've got to guard this. You've got to make sure that every single time you execute, you want to win. It's not a matter of forcing that thought and making it happen. It's a matter of doing the right thing every single time and not saying, okay, well, I see that everybody else is taking trades and I'm not, so I better do something. That's not the idea. That's not what you want to do. That's that fear of missing out. Anyway, I'll leave it there. I'm sorry for rambling here, but it's, these mindset concepts are super, super interesting. Like it can get to the best of us if we let it, and you've got to be, man, you've got to, it's like Jocko Willink. If you follow a lot of the stuff he does, or Dave Goggins, a lot of people try to get that mindset where they won't allow themselves. It's a matter of keeping yourself in check. You don't have to go that extreme, but I could see that it would certainly help if you need to break yourself of some of these bad habits where you're jumping in and out of the markets because everybody else is doing it, or you're in a chat room and you're listening to these people. I don't listen to anybody. I mean, I follow some of the recommendations from an economic perspective about what's going on in the economy, and I'm looking at certain things. There's certain economists that I do follow, but I'm certainly not going to take their trade recommendations. I'm just going to understand what it is that they see, what it is that they're looking at, and then I want to go out and look at it to see if I can see it in the charts. If I see it in the charts, then it starts to make sense, and then I'll continue to do a little more research on that particular idea or that trade idea. But again, you get to the point where you're trading like this, you're not going to be listening to anybody. There's no reason to listen to anybody. You can make these calculated decisions all on your own. And again, I've said this many times, when we all use the point and figure charts and we set them up the same way, and we're all doing the same thing, we all get the same targets. It's very, very easy to identify that this really, really works over and over again if you understand the principles initially, and you understand the mechanics behind creating these point and figure charts and what's actually causing the movement here. You're going to trade with 100% confidence every single time. I'm always certain that my trades are going to work. I might be wrong, but every single time I take a trade, I am definitely certain that that trade's going to work. Again, I could have made a mistake and I could be wrong, but you want to be in that mindset so that you are 100% certain every single time you execute that trade, not guessing. Thanks for watching.